Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I mostly want to go over some charts. That's pretty much all I want to do today. I want to make sure I get my point across here because for a little bit, I don't know, the past few weeks, the read for me has been a little bit unclear. And that's okay because we've had a good read on the market for most of the year. But over the last, call it a month roughly, I've been saying that I think it's time to start being more defensive. I haven't really had a good read on Bitcoin. We had a bit of a wonky cycle count. And that's okay. You can't have a perfect read on the markets all the time. So when you get into that situation, it is best to proceed with caution and just wait until you know what the market is doing, right? But the good news is, I do kind of think that I've got the read now on Bitcoin. I've come up with a line in the sand. So I want to show you that. I'm seeing this from James Choi. We'll start this off. Wyckoff accumulation. I'm sure you've probably seen one of these before. And this is the dollar index, okay? Undeniably, this dollar index is shaping up to look just like a Wyckoff accumulation, which of course could resolve in a massive upside pump for the dollar. If this is to occur, then of course that's going to pressure risk. There are some strange times in the markets that occur sometimes, not very often, but sometimes you can get the dollar rally and gold rally and the stock market rally and Bitcoin rally all at the same time. It doesn't happen that often, but just because, let's say this does play out, just because this were to play out doesn't necessarily mean that everything else has to go to zero. But this undeniably would likely speak to a risk-off moment across the board. I don't really believe this is what's coming. Now, could a counter-trend bounce occur? Yes, of course. But do I really think that this is what's coming? No. And the reason for that is simple. The cycle count for the dollar does not really permit this. So the dollar makes very, very consistent 3-year cycle lows. And the next one isn't due until sometime at the end of this year, maybe into Q1 of next year. So the cycle count, the longer term cycle count, does not really permit the dollar to rally sharply here. Now, of course, if we were to get some market meltdown, if we were to get some big stock market crash, if the top has already come in and we're about to go down and have some 2008 style plunge, then of course all bets are off. The cycle low will be forced early here and we could see this break out, right? That's why we have our invalidation level. That's why on my dollar chart, let me pull up my dollar chart for you. We've got this 2 downward sloping blue resistance lines. And I've been saying very consistently, you know, if we break out of the top blue resistance line, then we will have invalidation occurred. We will probably see much further upside for the dollar. But all the time we're contained underneath these blue lines, then I really don't see any reason to abandon this whole 3-year cycle low thesis. These 3-year cycle lows for the dollar are very, very consistent. So I still expect us to move down here. I noticed Bob Lucas has got this in the lower 90s. I think the mid 90s will be pretty much mission accomplished if we can get there. But that is to be determined, of course. Another reason I don't think that we're going to see this big dollar rally is gold has just left behind a weekly cycle low. So again, it doesn't mean that we couldn't roll over for gold, but typically, given that the dollar is on its way down to make this 3-year cycle low, has plenty of time left, 6, 7, 8 months of downside for the dollar cycle, that should speak to 6, 7 or 8 months of upside for gold. And the chart as well is undeniably in an uptrend, isn't it? We're making our way up to this all-time high. This will be the 4th crack at all-time highs. It's not that far from here. And we've got a full weekly cycle. We're only on about week 4 or 5 of this weekly cycle so far. So there is plenty of time left. 16, 15, these are early. Typically, we would see somewhere in the neighborhood of 20 to 22 weeks on average. So if the next cycle low, weekly cycle low, is not due until around week 22, then there should be plenty of scope to see gold push its way up to the all-time highs and break it before we drop into that next weekly cycle low. And again, more context, we are currently somewhere in this neighborhood, right? We're currently somewhere around here for the S&P 500. Now, we know this weekly cycle low is also in focus. So could we see a pullback in the markets? Yes. Would gold likely benefit at the same time? Yes. Does all of that align with the cycles? Yes. We're expecting this weekly cycle low to show up for the stocks. We're expecting to leave behind a week 16 cycle low and have plenty of upside left for gold. And all of this, in theory, at least according to cycle theory, should be catalyzed by the final portion of this 3-year cycle for the dollar. So overall, I don't think things look too bad. Not to mention, the 4-year cycle low for Bitcoin has been left behind back in November. So we should have a full 4-year cycle ahead of us. Now, we're going to get into what shape that's going to take, whether that's going to be a standard 4-year cycle repeat or whether that is going to be an all-time high this year and a 3-year bear market, a first true secular bear market decline for Bitcoin. We're going to get into that today. And like I said at the start of the video, I think I've got my line in the sand. So let's jump into this. I want to start with Bitcoin. So here's Bitcoin. This is that 4-year cycle low we left behind. Very, very consistent 4-year cycle lows for Bitcoin. Tells us to be open-minded about a full bore bull cycle ahead of us. The market is currently breaking down from this bull flag. So that is what it is. We are not very far now from the 60-day cycle low. This would be a 60-day cycle low that's over here in the green arrow. And we're currently on day 40. So perfectly reasonable to expect that this is likely going to do some sort of chop into that cycle low and then go. That's why I've moved my long position down here. If we were to break out, then we likely wouldn't do so for very long because that cycle low is probably due. So I think from a cycle perspective, I have no problem sitting on the sidelines for another 10, 20 sessions, waiting for this cycle low to show up and then looking to get my exposure and add longs back here. But the real big question for me is whether or not we're going to do something like this and actually fly out of here, actually put in an all-time high this year and then spend that 3 years making all the halving people that believe the halvings drive the bull market hold the bag, or whether this whole thesis of mine is just simply false. It's just not going to work. And we are just going to do exactly what we've always done, which is base here until the halving and then start a true bull market. So this cycle low is due. And remember, this is plus or minus 10%. So 6 days either side for a 60-day cycle low. But this cycle low is due somewhere between the 8th of August and the 20th of August. So right in the middle, we'll call that the 14th of August. So if I hop back into my fractal chart and find the 14th of August, it's right there denoted by this blue vertical line. So this for me is the line in the sand. If we make some sort of decline down into this cycle low time frame and then reverse sharply out of here and roughly track this fractal and start to go parabolic again, then I will continue to accept this as my primary thesis. However, if we find this cycle low and do anything other than come screaming out of here and advancing in a near vertical motion, if we do anything other than find this cycle low and then do this, right? Anything other than that, and I'm going to scratch this one off and say, no, it was a nice idea. It kind of made sense in my mind at least, but the market is clearly spoken, because if we do something like this, bounce and then roll over or go sideways or bounce and then come down and challenge the lower numbers, then this is clearly wrong, isn't it? So I just have to say, okay, fine, it was a nice idea, but we're abandoning it. So this is my line in the sand, okay? I will tolerate downside up until this cycle low is found. Remember, it could go as late as the 20th. Let me find the 20th for you. So here you go. I've marked out the 20th, which would be 6 days above. That'd be 66 days and 54 days on the left-hand side. So this is my timing window. This is my line in the sand. Like I said, we are either going to pull back down into this cycle low timing window and rocket higher, in which case I'm going to continue to assume that we are going to top this year and we're going to spend 3 years in a bear market decline, or we're going to find a cycle low and do something completely different, whether that is sideways, whether that is slowly up, or whether that is down. Whatever happens, we're going to have to probably scratch this one off. So it's still too early to say which one is going to happen, because as you can see from this fractal, we could quite easily do something like this, right? This is not beyond the realm of possibility. But we have to have an invalidation. I have to know exactly where to give up on this. And like I said, this is going to be my window in which I hold my hands up and say, nice idea, but not today. So for now, my primary expectation is that we are going to see a decline into a cycle low. And then the big question is, what happens out of that cycle low? I will be going long at the cycle low because that gives me a statistical advantage. That gives me a clear area on the chart to buy Bitcoin, put a stop below wherever the low forms, and then see what the market can give. So I will be looking to add to Bitcoin here, but it will also be very, very important to see what sort of price reaction we get. Given that Bitcoin is likely on its way to its cycle low, it's reasonable to expect Ethereum to probably trend down as well. But again, it's a rinse and repeat. Once we get to that cycle low, there's no reason not to add exposure and see what the market can give. XRP is still consolidating, arguably breaking down a little bit. So I'm going to keep pushing this trade. I think I can tolerate a move all the way back to about 56, 58 before I even start to get concerned. That would just be a back test of the range break. In fact, let's draw that in. So a touch of that would still be bullish in my opinion, and we could certainly see some kind of move like this that occurs out of that. So I'm going to continue to push this trade and see if we can get one more of these screaming pumps to show up. Of course, for the crypto related equities, it's also going to be really important for me to manage my risk and expectations for these crypto related equities. So if Bitcoin is going to find a cycle low, then the way we've been treating these crypto related equities is to wait for the cycle low or a breakout around the cycle low time frame and then add positions. And that's been working really well. and will continue to work really well if Bitcoin really is going to blast off and move higher, right? But if Bitcoin is going to trade sideways in a range or potentially even move lower towards the bottom of the range into the halving, then it's important for me to understand that it's an unrealistic expectation to think Bitcoin is going to go sideways or down and these crypto related equities are going to continue to do this, right? That set of conditions, this set of price action for these crypto related equities is solely dependent on Bitcoin also moving towards all-time highs. So out of that cycle low, I'm more than happy to push these positions into that cycle low, but coming out of that cycle low, I really want to see Bitcoin move immediately higher, or I'm going to have to start taking this exposure off. I'm going to have to start locking in profits, and we're going to have to respect the fact that likely all of these positions are going to go range bound and sideways for a while. I don't really see a reason for all of these to just continue on this absolute melt up path to all-time highs if Bitcoin is going to go sideways. So across the board, like I keep saying, for now, I'm happy to sit through the pullbacks. I'm happy to look to buy any dips as they show up and buy breakouts and continue to add to my positions on the assumption that we are indeed still going to move higher. But like I said, we need to make sure that we have our invalidation. If Bitcoin is going to find its cycle low and start to range, then I need to be getting out of these positions and walking away with some profit, because what's coming thereafter is likely a big pull down, and it's much better, rather than to sit through all of this, to just jump out when we have a clear reason to, and then look to get back in much lower down. So in terms of the stock market, I also think we're going to have answers this week. I really do. I think by the end of this week, we're going to have one of two things play out. Either we're going to have closed this week significantly higher, and therefore we can call this little dip the half cycle low and expect another 10 to 14 sessions of upside before then we get that pullback and the correction into the daily and weekly cycle low for the stock market. But it's also quite possible, especially given how stretched these cycles are, that by the end of this week, we're going to get some earnings misses, we're going to get some gaps down in the mega caps, and that is going to lead to big declines in the indexes. So if that's the case, we will also know for sure, we'll also have the clarity to be able to say, okay, this stock market, where is it? The stock market decline into the weekly cycle low is in play now. If we start to move down, then we can have a very high confidence and say, okay, fine. We have made a cycle high top and we're on our way to that weekly and daily cycle low, ready to get back to aggressive exposure again once we get there. So either way, we're either going to do something like this and say, yep, happy days, that's what's coming, or we're going to continue to go up for a bit and then we'll get that flush. So I think, like I said, either way, we're going to have clarity this week. This blue upward sloping line of support is my line in the sand. I've got my stop here to manage risk, but if we start to close a daily candle below this upward sloping blue support line, I will cut this trade and walk away with a profit booked from here to here. It's a similar story for the NASDAQ, isn't it? We've got a clear trend line in red, one clear one in yellow, and we could arguably have a third one somewhere like this in blue. So I like this trend line, this blue one, and there's confluence with this horizontal above the high. I've been saying this consistently as well. If this is going to close back below the original breakout level, this horizontal blue line, then I'm just going to cut this trade and sit on the side. In the worst case scenario, I could be wrong because say it does this and I cut my trade, it could then reverse and move a bit higher. But then, like I said, we know the cycle low and decline is likely coming. So I'd much rather save and preserve my capital ready for a much higher probability setup. And let's be honest, it's only a few weeks from now. So perfectly okay to sit on the sidelines for a couple of weeks and wait for that ultra high probability setup. So getting ready to close the NASDAQ if we can see some more weakness. Happy to push the S&P, as I said, all the while we're above the blue upwards open support line. And the Dow Jones seems to be doing the best, doesn't it? Dow Jones, a type 1 breakout so far, meaning type 1, no back test. Type 2 is with a back test, and a hard retest, or type 3 is when we break out and then close below the breakout line, only to then recover and resume higher. So currently a type 1 breakout, we are moving higher with no retest, and I kind of expect this to continue because look at the amount of months we spent in here consolidating, and now we're through. So it wouldn't surprise me if we saw a back test, but I would think more probably what we're going to see, since the Dow has gone sideways for so much time whilst the S&P and the NASDAQ have ripped higher, it wouldn't surprise me at all if we see some sort of institutional rotation out of tech and the S&P into those weekly cycle lows and into the Dow Jones as it continues to blast off higher. We've got a measured move target somewhere around the 38K number for the Dow, which would be a fresh all-time high. This seems completely plausible to me, but of course, as ever, we'll take things one day at a time and see what the market can give. For Apple, it's the same deal, isn't it? All the while we're above these upward sloping support lines, we'll continue to push this trade. But if the stock market cycle top is coming in, if we are going to have that reset into the cycle low, then I wouldn't be surprised to see Apple break down here. So as always, the line in the sand has been these upward sloping support lines. If we can continue to bounce in here, then we'll continue to push this trade. But I would not at all be surprised to see some kind of breakdown here that then reverses once the stock market finds its cycle low. If that's the case, we'll cut the trade on the breakdown, we'll draw a trend line, and we'll get back in on a trend line break for Apple. Tesla, was this just a shakeout on earnings that's now about to reverse and break out higher? Quite possibly. If that's the case, then we'll buy the breakout above this downward sloping purple resistance line, and we'll put a stop just below probably this low here, somewhere in this neighborhood. But I really want to see a daily close above this purple trend line before I can start to entertain this as an idea. But certainly if we can get above here, I will be adding this position back. So consider this a trade setup called out ahead of time. The 10-year yield seems to want to continue this breakout, hard retest, and then resumption. So is this going to continue? I would think so, assuming, of course, we are going to get a 25 basis point rate hike tomorrow. If, however, we move to a pause, I would expect this to sharply roll over and risk to come on strongly. But all the while we're breaking out, I would expect this to put some pressure on risk. That kind of makes sense, given everything I've shown you so far. We could expect to see a bit of a cool off in risk. We could expect to see this rally higher before then rolling over. And I would think only a surprise pause at tomorrow's FOMC would save this from moving higher and pressuring risk in the short term. So gold likely leaving behind a weekly cycle low, which tells us we've got 4, 5, even 6 daily cycles ahead of us. Looks like we're coming close to finding a cycle low in the not too distant future for gold. But like I keep saying, I do expect us to continue to resolve higher. The same is true of silver. I expect this to continue to resolve higher over the coming weeks, particularly if we can get a pause. Okay, the precious metals do not like high interest rate environments, and the reason for that is quite simple. Gold and silver are non-yielding assets, but when you've got interest rates of 5-6%, then you can quite easily get 5 or 6% as opposed to getting 0 yield on your gold and silver, right? But if they start to go to more pauses, if the end of the rate hikes or even rate cuts starts to become visible as light at the end of the tunnel, the precious metals will front run this massively. Once we start to cut rates, gold and silver should start to perform very, very well. So I would think that given we've left the weekly cycle lows behind, given we've got the dollar weakness as a tailwind pushing us forward, we also have the possible end to this rate hiking cycle in sight. I would think the precious metals can gear up massively here for a big breakout. I want to just remind you, this big red sloping resistance line goes all the way back to this $50 peak back here. So that would be, let's go to a weekly chart so we can see what's going on. This, if we can get above it, would be a massive, massive breakout for silver. And I think $30 will come shortly thereafter. So not quite time to be excited. But if I hop back down on the daily time frame, you can see it's getting close to that excitement point, in my opinion. So I hope you found that valuable. I'm certainly feeling a little bit more comfortable at the moment. Like I said, by the end of the week, we'll probably have our answers, right? We'll know what Bitcoin is going to do, and most probably the answer to that is work its way down to a cycle low. And then, of course, we have our line in the sand for whether we're going to have a 4-year cycle in a standard shape or this left translated early all-time high cycle that I've been calling for and expecting. For the stock market, as I said, we'll get an answer. Either we're incredibly bullish and going to continue to run this week, or we will have a clear top visible, which tells us we were right to be waiting for this cycle low to show up before getting back to maximum aggression and maximum exposure. Precious metals look good. Aggressive rate hikes or hawkish talk could possibly pressure them, but given where the weekly cycles are and given that we have a daily cycle low just ahead of us, again, we can still expect more upside. But overall, it's been a very good year. It's been a very bullish year. We've had lots of positions on, lots of long opportunities, and most of them have followed through and worked out quite well. But remember, there are ebbs and flows in the markets when it is best practice to conserve capital and wait for the high probability setups to show up. They're not that far away now. We're looking at around 30 days max, and then it's going to be time to really see what this bull market has under the hood. FOMC tomorrow, it's going to be a choppy week. Games as always, but you already know the deal by now, right? We let the dust settle and we handle this stuff like a pro. In the meantime, I hope you're doing well in life. I'm your boy Camel. Take care from me. All the best. Cheers. Bye.